Welcome to the Business Standard Banking Show. Are rising interest rates dampening home loan demand? What kind of home loan growth we would see in the new financial year? To find answer on some of these issues, we today have Viswanatha Gowd, MD and CEO, LIC Housing Finance. Mr. Gowd, welcome to the show.
Thank you. Thank you.
Let me start by asking you, how has been the business growth in the financial year 22-23, and what are the projections for the financial year 23-24?
For the financial year up to Q3 ending December, we were able to show year on year a very good growth of around 13% in our disbursements. Mostly it was in the retail segment, and this has been there even despite the global economic headwinds, and then it is causing a lot of disruption in various sectors, even though we could show very good in the sense growth rate. I also expect very good demand for real estate to continue in the new financial year also. We are seeing a rise in the new project launches across all the cities, even even in tier 3 towns also, with very good connectivity at the back, the government's strong infra push in the budget and all. So many major infra projects will near their completion, and will surely we'll see a lot of real estate traction in such locations. This will definitely add a lot of buoyancy in terms of demand for homes. And I am sure in the upcoming financial year, we'll definitely see some very encouraging growth numbers.
In the third quarter, loan disbursement was slightly tepid. Was there a pickup in the fourth quarter?
Yeah, loan disbursements were slightly tepid, we feel, majorly because many borrowers actually what happened, they adopted wait and watch approach to ascertain the how far the rates will move. They want to make it sure. Now I think the situation is more or less stabilized. Right. That's why we're in a position to see that there will be a shift in buyers' preferences. Mostly instead of waiting and watch, now they may slowly start buying. So having said that, the effect of earlier pent-up demand also tapered, now thus leading to a normalized growth rates. If you look at what happened throughout the period, we have been doing activities like very good competitive products and interest rate offerings right, to help and also sustain a very good demand momentum. And we expect these things to translate into very favorable results in the days to come.
For the current financial year, that is 23-24, you said that a lot of projects are being launched. So do you think your share of developer loans in the total loan will increase in this financial year?
What happened actually, the project book, we also earlier it used to be around 7% of our portfolio. Now it has come down, but now we are very selective in our approach. Okay. And we are also looking into very important projects where we can think of very good asset quality and then very good demand pickup. And with all these things being the selective approach, there will be slightly the builder's book also will slightly improve, what I feel, in the days to come.
The question is the rising interest rates. RBI has increased the interest rate by 250 basis points since May, and there is expectation they will raise it further. So are rising interest rates dampening home loan demand in any way? Have you seen any impact on this interest rate increase?
Normally in this floating rate scenario, it is quite possible whenever the rates go up, EMIs also commensurate with that. And of course, after the increase also is happening quite fast and steep. However, what happened, some stability also expected. What happened as the peak level almost all are nearing. I think post that there could be some reversal in the interest rate, probably the days to come, maybe after some time. But all said and done, despite this, the demand for home loans are almost all stable because the end user segment is now very active. The end user segment is really what we call really a person who is in need of the housing. That demand, actually, that segment demand is very much in place. So, and like I said in the earlier also, with interest rates stabilizing, we will see some very good uptick in home buying in the days to come.
What kind of growth projection you have in mind for the financial year 23-24?
Now, we are very positive that with all the things in place, in the days to come also there will be a good demand, and then we are the good player. Our own brand image is there with very good distribution channels across. and very good what you call digitization of our operations. And then we have put a lot of what you call systems in place. And we also spreading through our hub and spokes model, even reaching out to the tier 3, tier 4 areas also, thereby increasing our penetration very well. With all these things, I am very sure that we will have a very good growth rate even in the year to come.
Now, coming to the developer loan again, LIC Housing Finance was cutting down the builder loan book because the NPA was hit very high, around 45%. You expected some resolution to happen. Have you seen some resolution on the developer book?
Yeah, here what happened actually, the resolutions are also in good place, and moreover, our recovery teams are also across all are playing a very good job. And then what are the matters in NCLT are also literally they are also moving very good. With all these things in place, and then very good recovery teams and very good collection efficiency improvement, we are very certain that in the days to come, the asset quality will be far, far better than what it is today.
And credit costs also went up sharply in the third quarter to about 1.15% due to increase in the provision of the stage 3 book. Do you think it has normalized in Q4?
Yeah. In the earlier quarter, if you see, of course, it was our own conscious decision to what you call keep robust PCR in tune with the industry levels. So we went up to a good quality. That's why we made provisioning adequately in the Q3. Now coming in the days to come, the asset quality certainly is going to improve. As I already talked to you, our actual recovery system is in full place, and even we are having software to identify the early warning systems and are in place with a very good software, and then team working at all levels. I am very sure that in the days to come, the asset quality will certainly improve.
What will be your credit cost guidance for the financial year 23-24?
I think more or less it will be stable. It may even come down.
It may even come down. Okay. On coming to margins now, what is the net impact on your margins due to both rise in cost of funds and the lending rates?
I fully expect that margins to be more or less stable, if not better, because now funds, the costly as I agree, the cost of funds are also increasing. And I don't foresee any major impact on margins, as the cost of funds are always factored in our lending rates. That is also one factor to be looked into.
But by and large, how much the cost of funds have increased 11 months since the repo rate hike has started in May last year?
It will be around not more than, I think, around 100 basis points will be there.
Finally, sir, last month LIC Housing Finance had to reduce its fundraising due to hardening of yields. What kind of fundraising you are planning for the financial year 23-24?
Yeah, at this moment now we are adequately funded. Then our ALM position also very strong, and then our what you call portion of our fixed and fixed what you call floating is also very healthy. And for the next financial year, we will keep raising funds from time to time as per our need, more or less.
So you're saying that you're not in a hurry to raise funds. You are adequately funded to support your loan growth.
Yes, as on date we are adequately funded, and ALM also is in a good position, and it remains very quite strong also.
Mr. Gowd, thank you very much for speaking to Business Standard. It was a pleasure talking to you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.